sometimes the cure is worse than the disease. And in the case with the global pandemic, at least here in the US economy, the economic damage that we have already seen is already far, far greater than the amount of people here in the US infected and the amount of people dead. Not to make any less of that, but the economic damage is absolutely immense with the people who are unemployed, the people who are going broke, the businesses that will be lost, the depression, the people who have mental illness now, suicides. I've heard anecdotally the amount of suicides has increased. I think 10x. Well, people calling suicide hotlines, mental health hotlines, has increased 10x, 20x in some states here in the U.S. Just unbelievable amounts of economic damage so far, and yet the dollar index is still miraculously above 100. It's at 100.56, which is giving the Federal Reserve, which is giving Congress, which is giving the U.S. Treasury cover for even more bailouts. After this latest bailout package or stimulus package for SBA loans was announced of $483 billion or whatever the final number was. It was $483 billion a couple days, and yesterday they were talking about, I think, over $600 billion. I think they finally settled around 483. They were already today, Congress was, talking about the next package, including what I discussed a couple days ago, bailing out the states and municipalities too, and then maybe another SBA loan package. Again, they can get away with this as long on a relative basis as the dollar remains relatively strong against all the other garbage fiat currencies. And all these fiat currencies are garbage. We're in monopoly money here, as you can see there on your screen, with what is happening to the Federal Reserve's balance sheet. So the Federal Reserve's balance sheet increased by about a little over $200 billion. It was, I think, $6.37 billion last week. Now it's $6.57. So it's growing at about $200 billion per week. Insane. The jobless claims, which are also, it's part of that short video that I did with hockey sticks and a cash flow problem, because when people don't have cash flow, and there's no cash flow in society, really, really bad things happen at all levels of society. So now we have over 26 million Americans have filed jobless claims in the last 5 weeks. And according to this article here from MarketWatch by Jeffrey Bartosh, that the U.S. unemployment rate has probably topped 15%. Now, people who pay attention to shadow stats, John Williams, they know that those real numbers by other formulas were much larger than that in the past. But this shows, with the current version of manipulated government economic data here in the U.S., that for the manipulated data to get to 15% unemployment, you know things are bad. You know the real number is way, way, way worse. So let me just read an article really quick about the numbers. It's a very short article, numbers here. For the jobless, the record surge of Americans applying for unemployment benefits is starting to recede, but that's until maybe more firms fire people, but we'll see how long it takes to restart the economy. But another 4.4 million people filed new jobless claims last week to push the total above 26 million since the global pandemic laid siege to the U.S. economy a month and a half ago. The spike in unemployment has likely pushed the jobless rate to between 15 and 20%, economists estimate. And again, this is not the real number. John Williams of Shadow Stats has a far more accurate number. This is manipulated government data, which means the real numbers are way, way worse. Just like how inflation is way, way worse compared to the manipulated government CPI. The only other time in American history when unemployment was that high was in the early stages of the Great Depression almost a century ago. In less than 2 months, the global pandemic has eliminated all the 23 million jobs created after the 2007 to 2009 Great Recession. Wow. While less than 2 months. Wow. While the rate of job losses is slowing, layoffs are expected to tally in the millions for at least a few more weeks. There's no end in sight yet, because did you just see all the retail stores that are filing for bankruptcy? There's more. It looks like the Gap is about to file for bankruptcy or close to it. It's a long list of retailers. You have just in the last 10 days, you have Neiman Marcus, Lord & Taylor, JCPenney, and the Gap now all thinking of firing. And a lot of Americans, their jobs were retail, bricks and mortar retail jobs at shopping malls. The sharp and also restaurants and bartenders. The sharp and sudden flood in unemployment is the worst since the 1930s. Just a month and a half ago, new jobless claims were in the low 200,000s and stood near a 50-year low. Only about 1.7 million Americans were collecting jobless benefits. Last week, the states of Florida, California, Florida, Texas, Georgia, and New York reported the biggest increases in new claims, according to the Labor Department. Also, if you check online on social media, states like Florida, they're so far behind. They're weeks and weeks and weeks behind on jobless claims. It's just all over Twitter and the internet, on social media, how far behind some of these states are. Altogether, these states reported that 16 million people were receiving benefits through the second week of April, according to delayed government data on continuing claims. They were reported with a 1-week lag. Many states are still behind in processing the torrent of new applications for unemployment benefits. They're also struggling to adjust to loosened eligibility requirements orchestrated by Congress that now allow millions of people who previously would not have qualified to be able to receive benefits. It's important to note that government's figures for jobless claims are adjusted for seasonal variations. They did already some manipulation in there. Manipulated adjustments. The actual number of new claims filed since the pandemic began is somewhat smaller, 24 million. I disagree. If they're making adjustments here, the real number has to be larger. The big picture, the stuff I see in social media, it has to be larger. The big picture, the U.S. is experiencing an unprecedented shock to the economy from which it will probably take several years to recover. The unemployment rate likely won't return to the pre-crisis level of 3.5%, a 50-year low, only because they stopped counting people who stopped looking for work 6 months or more ago, as John Williams of ShadowStats has tallied up in his statistics, which are old government numbers, the more accurate formulas that the federal government and Bureau of Labor Statistics and Federal Reserve used to use before they started cheating even more. Okay, as the country grapples with far-reaching changes in the age of the global pandemic, I didn't say it, it'll probably get demonetized anyway. The federal government is trying to ease the pain with more generous welfare benefits, but states are already running out of money and asking for more help. Danielle DiMartino Booth said in my interview a couple weeks ago that the state of New York and the state of Illinois were instantly bankrupted from jobless claims. So that's the way of spinning it there in this article. So what are they saying? Although polls show that the overwhelming majority of Americans support staying at home and are against reopening too soon, the pressure on governors to do so is high. Again, the cash flow problem. Particularly because the government needs tax revenues, they need economic activity, and they need to collect taxes on sales tax, you eating out at restaurants, you shopping. Property taxes are not involving cash flow necessarily, but almost all the other taxes that government collects are all based on cash flow and economic activity in the real economy. Staying at home and are against reopening too soon, and that's why these state governors and municipalities all want ballots, are against reopening too soon. They pressure because they don't want to cut government spending. They don't want to cut government budgets. Pressure on governors to do so is too high, particularly when they look at the weak unemployment numbers, says senior economist Jennifer Lee of BMO Capital Markets. The number of Americans filing for unemployment insurance for the first time slipped for the third week in a row, but the numbers are still terrible. Let's see what happens with the SBA loans. So I've still heard a lot of anecdotal evidence that a lot of small business owners are not getting the SBA loans. So we'll see if that improves or not. There might be some companies that were holding out that haven't fired their workers yet, but there could be another spike. Okay, another story I wanted to talk about. You already see the Fed balance sheet there on your screen. I put it next to the jobless claims because that goes with my thesis there with the hockey sticks. That's the short little video I made with all the different hockey sticks, how the Fed's balance sheet has to go up. And remember, the real fireworks are off balance sheet. So on balance sheet, official balance sheet, the Fed's official balance sheet is growing at about $200 billion per week. Now, it was growing faster than that before. My friend hedge fund manager Tavi Costa said in my interview with him last week that the Fed's official balance sheet was growing at $75 billion per day. At one point. Looks like things have slowed down a little bit. That doesn't mean they can't ramp it back up, or the Fed is moving more and more of their shenanigans, like Enron, off balance sheet, so that people like me can't find the real numbers. So the Fed's balance sheet at this pace, couple more weeks, will be over $7 trillion. At some point, the gold price is going to keep exploding again. Okay, this article, I put the title on there. I could not fit the whole title article. It's from Matt Moffat of SF Gate from April 9th. And his firm did a survey. Well, actually, let me just hear. Half of the people taking part in a new survey assessing the effect of the global pandemic on personal finances reported that they believe their savings will run out before the end of April. Clever, a company that negotiates with real estate agents for lower fees, questioned 1,000 homeowners and renters on March 31st in order to gauge how they have been impacted by the outbreak. A day before, the St. Louis Fed predicted that 47 million Americans could lose their jobs and that the unemployment rate could exceed 32% before the economic freeze triggered by stay-at-home measures begins to thaw. The article is titled, "A Survey, 50% Say All Their Savings Will Be Wiped Out by the End of April." Came out on April 9th. Okay, Clever's survey showed that many of its respondents, I've never heard of Clever, but maybe it's real estate survey firm, showed that many of its respondents have little in reserve to weather a long recession or depression. Depression's far more accurate. They don't like using the D word, though. The findings include 22% of homeowners don't have enough in savings to cover 1 month's mortgage, which is why the mortgage industry, the $12 trillion mortgage finance industry, according to Christopher Whalen, banking analyst, was talking about mortgage forbearance and worried about all these mortgage-backed securities defaulting and how they're changing the rules and doing bailouts. There's a new Christopher Whalen piece. I may do another video on that about more bailouts for the mortgage finance industry. It's on his blog website, institutionalriskanalyst.com. Okay, almost half of renters surveyed reported having less than $500 set aside for emergencies. A similar amount said that savings won't be enough to cover 1 month's rent. I've talked about a lot of these stories over the years that a lot of Americans, 40% I think of adult Americans, didn't have $1,000 in their checking or savings account. I've seen another survey that some Americans didn't even have $400 or $500 for an emergency. Just really, really tragic. There's going to be a lot of younger adults that graduated college not too long ago, or they've been working for maybe 5 years or under 10 years, that are probably going to have to move back home with their parents. 30% of homeowners had less than $1,000 reserved for emergencies. The Bureau of Labor Statistics estimates the average homeowner spends just under $6,000 per month and recommends homeowners have between $17,300 and $35,600 squirreled away for expenses over 3 to 6 months in case they have no active income. Most people don't save anywhere near that. The average homeowner spends just under $6,000 a month, recommends homeowners have between $17,000 and $35,000 squirreled away for expenses over 3 to 6 months. Yeah, the average American doesn't have that. The average American relies on their cash flow, and if they don't have cash flow, the whole system... Cash flow is the gasoline to the U.S. economy, and I screwed up that analogy. Cash flow is the gasoline that powers the engine that is the real economy. 12% of homeowners are already behind on mortgage payments due to the global pandemic. About 27% are worried about defaulting on their mortgages. It's okay because the Fed and Fannie and Freddie and the banks will just change the rules so they don't default on the mortgage-backed security, so then the mortgage servicer companies don't default, and then it starts a daisy chain of counterparty collapsing. Sounds like behind the scenes, according to reading articles from Christopher Whalen, that a lot of these rules are already being changed. More than half of both renters and homeowners say they're racking up credit card debt to pay bills. Federal stimulus checks of up to $1,200 should provide some relief, but the respite is likely to be temporary. $1,200 is not really that much. For a lot of major metro areas, that's not even rent. But way to spin this in the article here. This guy's from SF Gate. He's from the San Francisco metro area and saying $1,200 should provide some relief. Let's be honest here. That doesn't even pay for rent in most of the areas. Most of the metro areas. The survey also found that the real estate market has been thrown into turmoil. It doesn't really provide for food either unless you're eating very, very cheap, unhealthy food. Because it's not like there's going to be farmers markets in a lot of these places anymore, right? The survey also found that the real estate market has been thrown into turmoil. Would-be sellers are taking their homes off the market, 23%, or dropping the listing price, 27%. Guess where that's not happening? I'll give you 3 guesses. I'll give you a hint. It's where I'm recording this live stream show from. That's where that's not happening, where the real estate market, where people are taking their homes off the market, not selling, worried. Okay, from what I just spoke to my best friend who's a successful real estate agent in this area, and he said they're still getting people calling in who want to buy real estate here. It's nuts. It's been going on for weeks now, over a month. that people still want to buy real estate here. This is an enormous bubble in so many ways, financially, ideologically, totally divorced from reality, the DC metro area. Nearly a third of the people surveyed for would-be sellers were holding off on listing their home. The majority of buyers, meanwhile, are bailing from house searches, either delaying plans, 48%, or giving up altogether, 17%, or they're thinking about buying real estate for investment purposes, I guess for capital gains taxes, here in the Washington, D.C. metro area. However, about a quarter see the pandemic as a buying opportunity should prices fall enough. The full details of the survey are in the article if you want to take a look. I will take a look at Super Chat questions and comments, see if we have any. Oh, I wanted to talk about one more thing. So Coca-Cola reported earnings, and Coca-Cola had the company has experienced, this was on April 21st, the company announced that it has experienced a volume sales decline globally of approximately 25%. So this is a key indicator here. So nearly all of that sales decline away from home channels. What this means is Coca-Cola's grocery store sales, where people can go to the grocery store or pharmacy and go and buy like cans of Coke or bottles of Coke, that's still doing well. However, all of their sales for like movie theaters and sports events and other concerts, stadiums, stuff at stadiums, so all of their, or people eating out at restaurants, so all of those sales away from home for entertainment purposes, like movie theater, sports events, I'm probably forgetting something important there that Coca-Cola normally sells a lot of, those sales have collapsed. So we're going to start to see some more economic data from some of the key companies like the consumer staple stocks, and we're going to see how ugly things are over the next couple weeks, maybe a month. We're going to get more information, how bad things really are. And did Coca-Cola shares crash? Did they crash? Let's look. Okay, Coca-Cola shares on February 20th, they did crash from about almost $60 a share. They crashed all the way down to about just under 38, 37.56 on March 23rd. They have rallied substantially now. They got up to around $49 a share, and they're settling. They're starting a downtrend again. They got up to $49 a share 10 days ago. Excuse me, April 9th. They got to $49 a share, and they've been sputtering a little bit, down a couple dollars a share over the last couple of weeks. But they did have a big rally from the bottom. We'll see what happens, though. The stock looks like it might be in a downtrend again. Maybe it'll just go sideways in a range. So we're going to have to take a look at more of this reporting from the companies, because the government data is going to be pretty unreliable. The stuff we're going to see from the companies out of sales, how bad the collapses are, we're going to get more valuable information there. Oh yes, I have almost 300 people watching, and please smash, tap, or click the like button. Just don't write any sexual stuff in the live chat area of what you're going to do to the like button. It's going to get me in trouble. There's like a handful of women writing that stuff a week or so ago. That's going to get me in trouble with YouTube. Not that the video probably won't be demonetized anyway, but whatever. We'll at least try to get a few dollars of ad revenues here before they demonetize it. They demonetized my Brian McCarthy video, my Brian McCarthy interview. It's a really good interview. They demonetized it. I had to protest it. It ran one ad, and then 5 minutes later they demonetized it. Unbelievable. He's like the top China expert in the hedge fund community and professional investor community. He's really well respected. He's right up there with Kyle Bass. Very, very well respected. Oh, thank you for the super chat, Sean. He is a loyal Wall Street for Main Street listener. I do not think he is a Patreon account contributor yet, but I do have a lot of Patreon account contributors now. I think it's might be over 800 now. So it is growing very rapidly. It is only $5 a month. There is a lot of research, articles, information, financial education, and analysis behind the paywall there. Only $5 a month. Probably the best deal of almost any newsletter. It's technically not a newsletter. This is just research. It's set up similar to a newsletter. You want me to do a show on InfoWars? I did an interview on InfoWars. I didn't even know I was going to be on InfoWars. I was told it was going to be a small podcast interview and that maybe it would get 100,000 downloads. I didn't know Robert Barnes was a show host on InfoWars. It's okay, though. Hopefully it'll grow my YouTube channel if YouTube doesn't censor it. Stalemate says Thomas Massie got the House of Representatives to do a full recorded vote earlier today this week. Yeah, well, all these bastards in Congress, Republicans and Democrats, they realize that now is the time to steal even more. So there's going to be, as long as the dollar remains relatively strong, they're going to do more bailouts, more stimulus. They're already planning the next round or two. That's how crazy this is. It's unbelievable. All these SBA loans, more rounds of SBA loans, bailing out the states and municipalities. It's just nuts. Oh, and then the new one was a new lending facility for the oil companies. It's getting tough to keep track of all of these. And in the off-balance sheet, I don't think anyone can keep track of that. This is why Ron Paul was so good at getting the one-time partial audit of the Fed. We really need to find out exactly how big the off-balance sheet stuff is. Oh, thank you for the super chat, though, Sean. I appreciate it. U.S. dollar index over 100. Yeah, I did mention that. I mentioned that at the beginning of the show. And that is what is allowing the Federal Reserve, Congress, U.S. Treasury to get away with more bailouts and more stimulus packages. Because they want to keep the dollar from rallying more against the other currencies, another dollar rally. They don't want it going any higher. And as long as the dollar doesn't drop too much, they can keep doing these bailouts and stimulus packages. I'm 100% confident the Federal Reserve is watching the dollar exchange rate, the trade-weighted dollar index, and also the dollar index. Okay, one super chat from Pebbleman buying, thank you for the super chat, buying a lake boat with your stimulus check, good investment or great investment. It doesn't put any cash flow in your pocket, so it's not an investment, but it sounds like good entertainment and fun. Super chat from Dimitri, thank you, Dimitri. He is also a Patreon account contributor, so thank you very much. Jason, what do you think about platinum and palladium? Their prices, especially platinum, looks nicely suppressed. The problem is all of those are reliant on catalytic converters. So for all of that paper price manipulation to matter, you have to have a combination for the paper price manipulation and lease rates, like my friend David Jansen is talking about. For you to get that pop again in palladium, you have to have also the industrial demand component. So you have to have the industrial demand, the end user, willing to continue to buy the palladium and the platinum, especially palladium, because I think palladium is preferred for the catalytic converters. And the industrial demand, I haven't seen any estimates of the exact number, but I would imagine that the industrial demand for catalytic converters has collapsed. So car sales were falling, and the palladium price was still doing well because there still was some industrial demand. So for palladium to take off again with for the paper price manipulation to get overrun, for the problems with the lease rates, you have to also have the industrial demand component for the physical metal too. So once you have the industrial demand component back, those metals may both run. Now, I think palladium has better supply-demand fundamentals because palladium's industrial demand component is better than platinum's. I think platinum is mostly used for jewelry now, and palladium is used a lot more for catalytic converters. I think that has changed a lot in the last, 7 years. Oh, you're talking about acquiring physical? Dimitri, you may want to talk to McIlvaney's bullion dealers because they allow you to trade ounces. So if you buy one of the metals when it's cheap, you can sell to them, you can trade it in for another metal, and you can play the ratio. So you may want to talk to the McIlvaney financial bullion dealers. They allow trading with the metals ratios. So if you think one of the metals like platinum or palladium or silver is cheaper than the other metals like gold, you can stockpile that metal through them, and then you could trade it in for the other metal later when the ratio goes in your favor. So they've had clients do that. So that's something you may want to speak to them about. They're one of the few bullion dealers that allows that. But yes, platinum and palladium are relatively cheap, but the industrial demand component is not working for them. That's what the industrial demand component is, what's going to drive the prices higher. Because the industrial end users buy, a lot of these industrial end users, this is true at least over the last few decades, is they tend to buy price indiscriminately. And that's what caused another big pop, I think, in palladium many years ago with Ford, if I remember correctly. It's a long time ago I was reading about this. Yeah, so there's people who do trade the metals. They trade the gold to silver ratio. They trade the platinum to gold ratio. But a lot of bullion dealers don't allow you to trade it in. They charge, it's normal capital gains tax. Well, there's no capital gains taxes, long-term capital gains taxes on metal if you're an American. It's taxed as ordinary income as a collectible. But I think there's a few bullion dealers that allow ratio trading. That's tax advantaged. I know McIlvaney is one of them because they advertise it and they talk about it on their podcast on the McIlvaney Weekly Commentary a lot. At least a couple times a year they do in-depth shows on it talking about the ratios. They're one of the few bullion dealers that does it. Okay, well, I think that's it for this short little show. Bottom line is that the jobless claims are still very high. It's a lot in only 5 weeks. I think there's still more to go. We'll see in the next couple weeks if it starts to taper off a little bit. But I also think that the SBA loan money is still not going to where it needs to go. It's not going to the small and medium-sized businesses here in the U.S. There's a lot of waste, fraud, corruption, and abuse there. The banks are screwing up. The SBA is screwing up. And a lot of the small and medium-sized businesses that should be getting the SBA loans, and I'm not in favor of any bailouts, but people on Main Street, if they're going to give out loans to small and medium-sized businesses, they should get the money, not these large corporations that don't need the capital. But the Fed's balance sheet is still growing. The growth rate has slowed a little bit. It was over $200 billion a week. It was growing it. Now it's down to $200 billion. But that doesn't mean it won't pick up again. Super chat from Evan. Thank you, Super Chat. Before I wrap things up, thank you for the Super Chat, Evan. What are your thoughts on the incoming reported food shortages, despite the rhetoric that, quote, when the economy is turned off, everything will be, when the economy is turned on, you mean, when the economy is turned on, everything will be fine. That's not how supply chains work. So that's all bullshit who's saying that. It takes weeks, if not a month or two, for the supply chain to get anything close to normal levels again. It's going to take months. It depends on each good. So if it's prescription drugs or food, like I've been seeing stories over the last couple days that supermarkets are now scrambling to try to get fresh pork and fresh beef. They're having real problems here in the US sourcing. The farmers still obviously have the animals, but the problem is the supply chain is screwed up because the meat packing houses, the slaughterhouses are shut, a lot of them. The three of the major ones for Smithfield in South Dakota, Wisconsin, Missouri are shut down. And then I think there's a couple beef plants that are shut down too. So the problem is in the different parts of the supply chain. So the supply chain is being distorted by the global pandemic. It's not gonna come back right away. So there's still a lot of pork. There's a lot of frozen pork supposedly. But fresh pork may start to be tough to come by soon. Same thing with fresh beef. Now, I don't know if there's an investment trend to play this because it looks like, I did a short video on this, Evan. I don't know if you saw it from a couple weeks ago, that a lot of these governments are talking about banning exports on some crops. A few governments have already done it and more are thinking about it. So if governments go to export bans, that means farmers and ranchers will not be able to ship their crops or their livestock to the markets that will pay them the best price. So if there's those types of distortions, the agriculture investments that some people are making now will not pay off. Again, this is government intervention. It's tough to trade and make money with that much government intervention when they put in wage and price controls, export bans. They change the rules that much. Okay, I want to thank everyone for listening. Thank you very much to my over 800 Patreon account contributors. It's much appreciated. It's growing very, very rapidly at only $5 a month. If you want to chip in a little bit more than that, that would be much appreciated too. But minimum $5 a month. Thank you very much to my PayPal contributors. There's still a few of you, I think. And also people chip in once in a while with a one-time donation. You can send a one-time donation to my PayPal account, wallstreetformainstreet at gmail, WALLSTFORMAINST@gmail. Or you can, I have the addresses for 6 cryptos. You can tip me a little crypto if you want, including Bitcoin, Litecoin, or Ethereum.